In just 5 minutes, 24,000 BTC worth over $2.7 billion was dumped on the market. Bitcoin plunged by more than $4,000, sending shockwaves through the entire crypto space. What exactly is going on? Last night, a massive whale unloaded 24,000 BTC in a single move, triggering an intense sell-off. Bitcoin's price nosedived from around $124,000 to just under $120,000, even dipping to $118,500 before a quick recovery. On-chain data showed the whale ratio spiking just before the dump, a clear signal of heavy selling pressure. But here's the twist. Almost immediately after the sell-off, large holders started pulling BTC off exchanges, hinting that institutional investors are still quietly accumulating. Interestingly, Ethereum barely flinched, holding strong near $4,900 after hitting a new all-time high. Meanwhile, Solana remains in the spotlight, trading actively around $185 to $190, fueled by strong DeFi ecosystem activity. The Fear and Greed Index has dropped from 60 to 47, signaling a shift to a neutral sentiment. Not overly euphoric, but definitely not in panic mode either. So, what does this mean for next week? Will Bitcoin bounce back stronger, or is a deeper correction on the horizon? Hit that subscribe button so you never miss out on our rapid updates and deep dive analyses when the market moves. So, what does this mean for next week? Will Bitcoin bounce back stronger, or is a deeper correction on the horizon? Hit that subscribe button so you never miss out on our rapid updates and deep dive analyses when the market moves. In just 5 minutes, a crypto whale dumped 24,000 BTC worth $2.7 billion. Bitcoin plunged $4,000 almost instantly, shaking the market. Late last night, a massive sell order hit the order books. Bitcoin dropped from $124,000 to just under $120,000, triggering a cascade of stop-loss orders and liquidations. Panic rippled through the market, hitting altcoins even harder, especially those with low liquidity. Despite the violent dip, the market is showing signs of recovery. The total crypto market cap is still holding near $4.01 trillion, signaling that major players haven't exited. Bitcoin is stabilizing around $121,000 to $122,000, with strong trading volumes. Ethereum remains powerful near its all-time high of $4,900, while Solana is steady at $185 to $190, fueled by strong DeFi demand. The Fear and Greed Index is now at 47, down from 53 yesterday and 60 a week ago, signaling a shift to a more neutral sentiment. Institutional investors are still holding their positions, a clear sign of confidence in the market's long-term outlook. In the short term, Bitcoin may consolidate between $121,000 and $123,000 as the market digests this whale activity. Altcoins like ETH and SOL remain strong performers. But if whales continue to unload, or if macroeconomic news turns negative, Bitcoin could retest the $118,000 support level. For short-term traders, stay cautious. Avoid chasing pumps and wait for clear confirmation signals. For long-term believers, this dip could be a buying opportunity in the next growth cycle. Always set stop-loss orders and diversify your portfolio to manage risks. It started with a sudden flash of red on the charts. In less than 5 minutes, more than 24,000 BTC, worth an astonishing $2.7 billion, was dumped onto the market. For anyone watching, that sharp, vertical red candle on the Bitcoin chart felt like a gut punch. The price plummeted over $4,000 in what felt like seconds, dropping from $124,000 to nearly $120,000. Traders scrambled. Panic orders fired across exchanges. The sound of liquidations echoed in real time. This wasn't just numbers on a screen. It was fear, pure and simple, rippling through every corner of the crypto space. The immediate shock, I remember refreshing my charts, watching Bitcoin tumble while altcoins spiraled even harder. For smaller cap assets, those low liquidity tokens, every tiny sell order triggered an exaggerated move downward. It felt chaotic, a reminder of how fragile markets can look when a whale decides to move. Social feeds lit up instantly. Some screamed capitulation. Others begged for calm, but the energy was the same: uncertainty. The market that had felt unstoppable just hours before was suddenly on edge. Signs of recovery, but here's the thing: markets have a rhythm. After the chaos came the stabilization. By the next morning, the storm started to settle. The total crypto market capitalization hovered near $4.01 trillion, proving one critical fact: the big money hadn't left. The foundations were still solid. Bitcoin itself started to recover, trading between $121,000 and $122,000, with volumes remaining strong. This wasn't a dead cat bounce. It was a signal that buyers were stepping in, ready to absorb the shock. And then there was Ethereum, ETH. Even after all that turbulence, it held close to its new all-time high near $4,900, as if untouched by the panic. Solana, Sol, too, showed strength, staying firm between $185 and $190, backed by heavy DeFi activity and high trading volume. The market's mood, if the charts were the pulse of the market, the fear and greed index was the heartbeat. A week ago, it was sitting at 60, flashing greed. Yesterday, 53. Today, 47. It wasn't fear, not yet, but the greed had cooled. It was a sign of caution creeping in, of traders and investors taking a step back to reassess. And still, the institutions, the funds, the whales who really move this market, stayed put. They weren't bailing. If anything, they were watching, waiting, and preparing. Looking ahead short term, Bitcoin looks like it's consolidating. The key range sits between $121,000 and $123,000, building a base before the next significant move. Altcoins like ETH and Sol remain bright spots, supported by strong fundamentals and momentum in their ecosystems. But the shadow of risk still lingers. If whales decide to push more BTC onto exchanges, or if negative macroeconomic headlines hit, Bitcoin could easily test $118,000 again. Lessons for investors. For traders focused on the short term, the message is clear: stay disciplined. Don't let fear or FOMO dictate your next move. Wait for confirmation signals before jumping back in. For long-term holders, the story looks different. These dips are often moments of opportunity, quiet windows to accumulate quality assets before the next wave of growth. And for everyone, one rule remains timeless: manage your risk. Set stop-loss orders, diversify your portfolio, and never let a single position dictate your emotions or your strategy. A market that breathes. This entire episode, the fear, the drop, the slow climb back, is a reminder that the market breathes. It contracts, it expands, it tests the resolve of everyone in it. From panic to patience, from fear to strategy. This isn't just a story about charts or numbers. It's about the collective psychology of millions of investors around the world, each trying to find their balance in the storm. And as the market steadies, one thought lingers: this isn't the end of the story, just the end of another chapter. The next move is already building, and those who stay informed and prepared will be ready when it comes. Staying grounded amid volatility. After a night like this, it's easy to feel overwhelmed. One moment, the market feels unstoppable. The next, it's sliding fast, taking billions off the table in minutes. But here's what seasoned investors know: volatility isn't the enemy. It's the price of admission in crypto. Every sharp drop is a reminder. The market rewards patience, discipline, and preparation. Those who panic sell often miss the recovery. Those who watch, plan, and act with a level head, they're the ones who consistently come out ahead. Patterns we can't ignore if you look closely. The signs were there. The on-chain data showed elevated whale activity hours before the dump. The exchange-whale ratio spiked, signaling potential sell pressure building. And the market sentiment, while still greedy, was starting to cool. These patterns don't just tell the story of a sudden sell-off. They tell us how the market breathes, when it's gearing up for expansion and when it's preparing to reset. Opportunities hidden in the chaos, even in the panic. There are opportunities. Ethereum holding close to $4,900 signals strength, not weakness. Solana maintaining its range between $185 and $190, while DeFi volumes surge shows confidence in its ecosystem. For long-term investors, these dips are rarely the time to retreat. They're moments to zoom out, revisit your strategy, and see where you can position yourself for the next uptrend. What comes next? Looking ahead, consolidation seems likely. Bitcoin is showing signs of forming a base between $121,000 and $123,000. If that base holds, it sets the stage for the next move up. But this market doesn't move in straight lines. Another wave of whale activity, or a macroeconomic headline, could trigger another test of the $118,000 support. Flexibility is key here. Be prepared for both scenarios. Lessons to carry forward: discipline beats emotion. Always trade your plan, not your fear. Data is your ally. On-chain analytics and sentiment indicators can give you an edge. Protect your capital. Stop losses and portfolio diversification are not optional. They're essential. A calm mind in a chaotic market in the world of crypto. Storms are inevitable. What matters is how you navigate through them. This sell-off, like many before it, will fade into history. A data point on a long-term chart. The question is, when the next chapter begins, whether it's a rally to new highs or a deeper correction, will you be ready? Closing thought: markets don't just move numbers, they move people. Behind every candle, there's emotion, excitement, fear, hope, and strategy. If there's one takeaway from this week, it's this: stay informed, stay patient, and above all, stay in control. Because in crypto, the ones who keep their heads while others panic are the ones who write the story of the next bull run. Looking beyond the headlines, every market swing, every sharp candle, it's more than just numbers. It's a story of conviction, fear, and opportunity. When a whale sells 24,000 BTC, it shakes confidence. But it also reminds us why this market exists, because change and innovation are never comfortable, and volatility is the price we pay for being early. The investors who thrive aren't always the ones with the deepest pockets. They're the ones who understand the rhythm of the market, who can see through the noise, block out the fear, and focus on the signals that matter. The long view: zoom out for a moment. Look at the bigger picture. Bitcoin stabilizing around $121,000 to $122,000 despite a massive dump. Ethereum holding near its record high around $4,900, a sign of strength and institutional trust. Solana steady in the $185 to $190 range, fueled by relentless DeFi activity. These aren't signs of a collapsing market. They're signs of a market recalibrating, resetting before its next decisive move. A mindset shift. If you take only one lesson from this moment, let it be this: in crypto, mindset is everything. The difference between panic selling at the bottom and accumulating smartly during dips often comes down to perspective. To the short-term trader, this was chaos. To the long-term believer, this was opportunity knocking. Actionable takeaways: stay calm. Stay focused. Don't let fear or hype dictate your trades. A calm mind makes better decisions. Use the data. On-chain metrics, whale trackers, and sentiment indicators are there for a reason. Use them to anticipate moves, not just react to them. Plan, don't guess, set your stop losses. Diversify your portfolio. Have an entry and exit strategy and stick to it. The road ahead, the next few days will be telling. If Bitcoin holds this consolidation zone between $121,000 and $123,000, momentum could shift quickly. But if another wave of sell pressure hits, don't be surprised if we retest $118,000. Either way, the story isn't over. Not for Bitcoin, not for Ethereum, not for the broader market. The next chapter is already writing itself, and those prepared to read it will be the ones who benefit the most. Emotional closing. This market breathes. It expands. It contracts. And every move teaches us something new about the market and about ourselves. The fear, the patience, the small victories, they're all part of the journey. So take this moment, this story, and let it ground you. Because in crypto, the future doesn't belong to those who panic. It belongs to those who prepare. Call to action. If this breakdown helped you see today's volatility more clearly, share it with someone who needs to hear it. And if you want to stay ahead of every major market move, subscribe, like, and hit the bell icon so you're ready when the next big moment unfolds. Because in crypto, the story never stops. And neither should your learning.